Trading is hard. We're just trying to basically make it easier by following simple setups, simple strategies that fit our criteria as a trader. Now, for every specific person, that could be totally different. I'm going to teach you something that is very simple, follows trends, and could literally make you hundreds of dollars a day, possibly thousands of dollars a day, depending on how much you're putting in and how much you're able to risk. Everyone has a different situation. So, as you know, indicators are lagging. Obviously, something, if you haven't learned yet, it's something you just learned right now. But there is some that I believe that you should just have as a tool. Some simple EMAs, some simple SMAs. In this case, I'm going to talk about the 9 and 21 EMA, pink being the 9 EMA, the green being the 21 EMA. I also have the 200 SMA here, which is a light blue. And I don't have the 50 SMA up, but it's the orange here. That's things I kind of keep on. I like to have volume point of control. But other than that, you just want to keep it simple and look at price action because price action is everything. You're obviously going to see where volume's coming in. You're going to see, okay, are they wicking it here? And if they're wicking it, usually that's a sign of, okay, buyers are trying to step in on it and reverse this, or sellers are trying to step in and, reverse this to the downside. In this case, we're going to go over a couple of those things. And a perfect example is just going over Friday. I mean, the markets, let's pull up a QQ chart, okay? The markets, let's pull extended. We gapped down over 1.5% at the open, okay? That's where we're at the open. You're under 598. Obviously, as you can see here, we went up over $15 in just under 3 hours there since the market opened. And you had a pretty strong trend. So first thing I want to look at is me personally, I'm looking at 4 to 5 different time frames when I'm trading. I kind of just like to cycle through them. It would be the 3, 5, 10, and 15 minute. Again, that's for me personally. It's worked for me over my 10 plus years of trading, as well as it's just something I kind of stuck with and developed. Especially, I'm a day trader. I like to scalp a lot. And, if I get strong reversals, I do like to, try to let runners run. And in this case, we're looking for those examples where we're just trying to find and be patient for that right entry for a short or a long. And that's another key thing is just being patient. And that's where this strategy could really help you do that. So let's kind of dive in here. So what I'm looking for is when we're trending now, whether we are continuously going up or continuously going down, in this case up, I'm going to look for longs. Okay. I want to obviously go along with the trend. I don't want to fight it. I don't want to short it because if you do it, I mean, look at this. Let's say we shorted here at the first, kind of dip. Look at that. You went $2 and then you went $10 up. I mean, it's something you just need to be able to, and not saying, a short here obviously wouldn't have been bad, but who knows if it's going to continue there. Okay. So what I'm looking at here is, again, going to make this as simple as possible. You're going to look for 9 and 21 EMA bounces, something you've probably heard before, but if not, I'm going to try to simplify it in the simplest way possible. What I like to do is look at smaller time frames, like the 3 minute or the 5 minute. I like to cycle through those, especially when I'm trying to find an entry. So for example, I would probably enter on a long here on the 9 EMA, and then my risk would be a close under the 21 EMA. Now, if we hold that 21 EMA, I'm going to look to add to my long on a dip. So I'm, managing my risk. I'm entering a small position at the 9 EMA with the possibility to add more at the 21. And all these cases here, other than this one where it almost got there was really no ads today, and you were just able to ride that 9 EMA all the way up. And no matter what the position size you had, with VIX at 20, which is higher volatility, you want to size lower anyway. And in this case, me sizing in smaller or half size, quarter size, third of the size, and being able to size into my trade, I'm still going to make a good bit of money with higher volatility. So perfect example here, you get long on the 9 EMA. you hold the 21, you get right back above the 90 EMA, and you just ride this up. You have another opportunity here. You long it. In this case, you could have possibly added on the dip. As you could see, we held that 21, and then we continue to ride it up. So now, as I'm trading this, I'm obviously going to trim out as we go higher, as well as set stops in profit and continuously raise them as the bar keeps raising there. So I'm looking at the 3 and 5 minute for entries, and you could see same type of setup here on the 5 minute. We get to the 9 EMA, don't get anywhere closer to that until halfway through the day. Now, here's one thing I want to state here. Another thing is this is where that price action kind of comes in. Okay, so we start to see we have one tap, we have two taps, we have three taps. And now you start to see we're just riding that 9 EMA, okay? And obviously you could see the price action. Yes, other than this big spike here, it gets slower, okay? It gets slower. You're starting to see some upper wicks, okay? Upper wick. And you're starting to see those EMAs really get close together now, okay? So now I'm thinking, maybe they're running out of steam here. And I put it on the 3 minute here so you can kind of see the same thing. You're going to see those upper wicks. You see it slowing down. See it starting to kind of curl, kind of rounding here. And you could see on this case, so we did hold the 21. And personally, I actually took a short when we got up here. And I'm going to explain that now on how you could kind of play this in an opposite way. I didn't take a long when we got up here because I started to see this slowing down. I started to realize the price action that was forming here. You can see we have a high here, and then we have a lower high here that immediately got rejected. So in my eyes right here, I'm looking for a short. I already see the EMAs are slowing down as well, getting much closer to the price action and starting to curl themselves. Okay. So now I'm starting to look for some downside trade, and this confirmed it with the lower high of this right here. Okay. So now I'm short. And this trade worked out perfectly because we dropped over like $6 here on QQQ in under 45 minutes. Actually, just about an hour. Just about an hour. We dropped about $5.50. So again, worked perfectly. I didn't get that full move, but I made a good chunk of that move. I got stopped out on this candle right here for my remaining trade after I trimmed somewhere right around here at that volume point of control around 610, which was a key support level. Prior resistance now turned support, and you can see we did go under it, but broke back above. So now what you kind of want to do is, okay, so we start to see that these EMAs start to get closer, get tighter on the price action. You start to see the price action slow down. So now I'm looking short, or at least I'm not seeing, something going higher. And this is where price action comes into play. So personally for me, after the trades I had by 1 p.m. Eastern, I'm done for the day. Why would I risk anything else personally? Again, this is called being patient, proper risk management, just trying to, and again, on a Friday, you want to end the week on a well note. So, just something to keep in mind there. You do not have to be in a trade every second. And that's something I learned as a trader early on in my career when I lost my ass because of that. I wanted to be in a trade. I was up 4,000 on a day, and I ended the day, down 1,000, down 2,000 because I wanted to keep trading. Try to get that mindset out of your head and focus on being smart and being patient. Now, we saw the upside playing the bounces on the 9 and 21. Now let's look at the downside. Okay. We're starting to see rejections. We even saw a 9 and 21 cross to the downside. So now you short the 9 every time until it breaks above that 21. Again, same type of example there. And obviously this is end of day here, so I wouldn't really want to do anything crazy, but you can see the same thing here, okay? You see price action is slowing down, and you see the wicks coming in, so a possible reversal is coming if there was more time in the day. Hopefully that was easy to understand. If you guys have any questions, always feel free to ask. Other than that, again, just be patient, size appropriately, especially in higher volatility markets that we currently are in right now, and just follow a simple strategy. There's no need to make it hard for yourself. You will not win a trade. You have to understand that. But if you size appropriately, have a proper risk management, and just follow the trend, it will work in your favor.